name is Chihiro Ramatula. I am a partner at Highlands Venture Partners, which is an investment firm in New York. And I'm also co-founder of a brand called Commons.
Lovely, Aaron.
My name is Aaron Gray, senior analyst covering consumer and cannabis at Alliance Global Partners and also based in New York.
Sanders Egzebski. I'm a partner at Clark Hill and co-chair of our cannabis industry practice group.
And we have Pablo. Pablo, just in time.
Thank you, Javier.
Pablo, want to quickly introduce yourself?
I'm an equity analyst. I cover the sector for about 5 years under my own banner now, Swanich and Associates. Thanks.
So this is a panel that is maybe for nerds. I will enjoy it. As you can tell, I'm not Tim Seymour. I didn't get shrunk, it's just flight is late, but he'll be here later. But I'll be filling in for him. And today we'll be talking about how to determine the worth of cannabis companies, which is definitely a complex task, something that perplexes many of us. But fortunately, we have 4 great experts who know their stuff in the space. So we're going to start with a very straightforward question, and it's, what kind of metrics are you looking at today when determining the worth or valuing a cannabis company, and how has that changed, over the course of the years, right? When we first started, we weren't really valuing companies at all. It was however it felt, this company is worth this much, and we would just assign a value based on the market potential, on market projections, but of course this has evolved. So, what are you looking at nowadays, and how do you believe that will continue to evolve? Will we ever be at a point where it's like a quote-unquote regular industry, or will we continue to use metrics like EBITDA, which is, I don't know, not ideal, let's say?
I'll take a part of that and let you guys fill in the rest. I think the shift that I've seen more is, and how we also look at deals is, as opposed to just focusing on growth, which I think is kind of the trap of a lot of startups, VC-backed companies. Growth is growth at all costs. It's really the focus on operational efficiency and profitability. So metrics on both sides of those have shifted to be able to see what's the longevity of a company, considering that we're still resource constrained, financially constrained, and what does that timeline look like? So that's where we've been really focused.
Yeah, no, certainly agree with that. If you look back to 2019 when a lot of the RTOs were occurring, it was what states do you have exposure to, what's the TAM today versus what could it turn into via conversion of adult use, what are the growth opportunities. Today, one of the first things I'm talking about with investors is what's the balance sheet look like, right? What's the cash flow? And I'd say that's become much more of the focus, and that's why you've seen operators focus on the efficiencies that was just spoken to.
If you're asking your lawyer about which metric to use for valuation, you're probably talking to the wrong person, but I would certainly observe that the valuations have moved from a more wishy-washy concept and certainly a more optimistic concept in, say, the 2018-2019 range to something a little more mathematical, more balance sheet driven, more financial statement driven than we would have seen in the past.
I just want to say hi to my panel. Hi.
Hey, Tim.
How are you?
Nice to see you.
Tim.
Hey. Very sorry I'm late. Let's just say that the White House apparently says this is Second Chance Month. So I missed my flight last night in New York. And I'm here to moderate this fantastic panel who obviously got up and can do this in their sleep in the conversation about valuations. What have I missed so far, Pablo? I'm sure we've discovered
had the same problem that you did. My plane left at 1 a.m. last night. But anyway, no excuse for me. Look, on the question of valuation metrics, you can say that to some extent you throw everything out the window. I used to cover consumer staples, right? So I had to worry about how much more Coca-Cola are people into drinking in South Africa, or how much more cereal in the UK. I find that this is totally different, right? For 2 primary reasons. One, it's potentially very explosive industry growth. $30 billion in sales right now. If you count the illicit market, is $100 billion in total, illicit and legal. With innovation, R&D, more distribution, the market would be greater. You factor international opportunity. The point is explosive growth, right? But on the other hand, the truth is that you don't know what the future is going to look like, right? So what do I look at? I really look at the short term.
Can I push back on one thing? Because look, explosive growth, we all kind of get that there's the addressable market for cannabis grows and grows, but we all talk to investors all the time, and the sense is it's actually, the top line's been somewhat muted, right? So if I push back on that, but I guess I wanted to address everybody on this one, because I think we've all been saying for the last 4 or 5 years, or maybe 7 or 8 years, that cannabis is CPG. It is consumer staples. There's obviously a discretionary element of it too. And so if I read really talented analyst research reports like the folks we have here, I'd probably hear today that cannabis trades at a 50% discount on EV/EBITDA to traditional staples. And boy, this is a really exciting opportunity. We've been saying this for 5 years. So I guess, help me with this. Is that legit? I mean, is that 50% discount to consumer staples, which is unquestioned? Is when you weigh all the other dynamics, how do you feel about that comparison?
Yeah, and I'll be very brief. I mean, I'll let the rest of the panel speak also on the topic. But what I was saying, precisely what you are saying, right, is that I cannot use the consumer staples metrics because I don't know what the future is going to look like. Right. There's too much uncertainty in terms of how the regulatory side of things plays out. But on the other hand, I cannot forget of the growth potential theoretically over time. So. But to be clear, in terms of the growth has been somewhat muted. 4 years ago, we were about $15 billion in sales. Right now, we're at $30 billion. Right? You have more states legalizing. So I would push back on the muted growth element. There's been significant deflation because all these markets start with very high prices. So it's been a volume growth story. So growth has been there. But again, all I'll say is that yes, I look at EV to sales, EV to EBITDA. But I remind that this is a momentum sector driven, and we can expand on that later. Sure. So those metrics, those discounts to CPG, although those type of arguments I take lightly, I look more at the momentum and sure, where valuations are taking a long-term view. Great.
Aaron, I read your research all the time. It's fantastic. And I know you're of the view there's a value dynamic going on here. So talk about that. Pablo has brought up it's not necessarily apples to apples. We all know that. And at some point I want to get to everybody's views on the different catalysts for this industry that really will drive revaluation. And we know the 2 or 3 things. And one of them is just, if everyone could own this sector, it would trade differently. But just, kind of address this discount.
Yeah, so absolutely. So to start, one bigger thing, it's harder to make it apples to apples in terms of EBITDA evaluation just because 280E and taxes. So I'll touch on that briefly. So that alone makes it harder because EBITDA doesn't translate into cash flow like it would for a traditional company like CPG because of the 280E owner's tax. But secondly, going into more of the CPG actual factor, it's something we've certainly spoken to. We've seen cannabis as some type of combination of high growth retail and CPG, but there are things within regulations that limit it on both fronts, right? On the high growth retail, there's caps on ownership. So it's really hard to get the scale of high growth retail that you would expect, from a Boot Barn and Ollie's, a Five Below, except for certain markets like here in Florida where you can actually get that scale, or some markets like Canada as well. And on the CPG side, we've certainly spoken to the need for the long-term CPG play needs to be built out in wholesale. And you've seen, I've written in a number of occasions that we need to eventually start seeing more wholesale build out. And I think last year for a lot of the operators of the MSOs, there was such a focus on the efficiencies and getting the cash flows in order, they couldn't focus as much on the wholesale opportunities. But I think there's potential things that could come now to where when they shore up the balance sheet, right, they get some advantage, potentially there's some shakeout, and you get some more growth opportunities on the wholesale as more stores open up. But I think the growth in the wholesale is really needed to start justifying the fact that some of these operators can be seen as CPG companies.
Yeah, I think you're also right, because you're addressing subsectors and there's different parts of, a lot of people here know the full spectrum of investments. There may be people in here that just know about multi-state operators and that they have these vertically integrated businesses. To hear you've been involved in the sector for a long time, but you've been involved almost from a technology perspective, from a software perspective. I mean, a lot of, again, places where EBITDA may not mean a whole lot. If I'm investing in developed markets today, I'm putting a very different multiple on software and very different multiple on growth. So I'm just kind of curious, give us a fresh kind of look into where you see those valuations for those companies that, again, are not really apples to apples, but certainly are existing and setting up, right upside developed market peers that do similar things outside of this industry.
Yeah, I mean, I think when you look at the technology platforms, I mean, we've certainly seen growth and advancement across the cannabis technology landscape. At some point, that line has started to blur on what is cannabis technology versus where it should be playing in other spaces. Unfortunately, they're limited in so many ways because either they can't necessarily cross into those other sectors, but when you think about components around data, and there are companies here that I've talked to that are already crossing over and expanding that, their platform, the data that they're ingesting, and who they're selling it to. And so when you look at companies like that, they're starting to look at what we would say like traditional tech. I don't know how traditional you can say it is because it's still all over the place, but you can start comparing it in a much more logical way. And I still don't want to say apples to apples because there's still so many more limitations on cannabis technology companies that all the other cannabis companies still face. Like when you think about elements around banking and where they can operate and can they list or not? Where they can get financing? So those, I think, hindrances are still there, which I think pulls down valuations in one way. But on the other side, if you look at what's happening, it is similar to what's happening in big tech. The utilization of AI, how that can actually impact cannabis businesses. And I think then looking at operators in the cannabis industry and how they're utilizing technology and that efficiency, because that is still something that is lacking in a lot of areas, the utilization of it, because it's still new and it's not necessarily a focus because we're still, in some areas, still working on Excel spreadsheets.
Well, and that's a good thing. And Sandra, I mean, you're talking to investors all the time who in some cases maybe are coming from outside of the industry, they're kicking the tires, maybe they're folks that are already here. Obviously, you guys are in the middle of all the elements. What would you say is what you're hearing first and foremost from investors in terms of the valuation opportunity, and really what are they drawing to? Are they drawing to growth? Are they drawing to margin? And again, whether this is operating companies that also are assessing their parlay into cannabis.
Sure. Well, as the lawyer on the panel, I mean, whenever we're getting the questions, it's usually about when is legalization going to happen, or now it's rescheduling, and what are the ramifications of rescheduling, or what's this 280E refund that Trulieve just got, and is it something I can do as well? And those conversations, the legality has always been the elephant in the room for this industry, right? If you go back to 2018, 2019, and you realize that the vast majority of the institutional buy side can't be in the cannabis industry, you had a lot of people licking their chops saying, all of the major sources of liquidity are gone, and so maybe I can be that source of liquidity, or I can partner up with a Russian oligarch and be that source of liquidity, something like that. And it worked for a while, but particularly when Constellation Brands put all that money into Canopy, and everybody thought they must know something, and this is all going to happen immediately. And here we are.
They might still.
Well, eventually it's going to happen. It's just a matter of when it's eventually going to occur. But and right now, by the way, there's a rumor about rescheduling happening this week, which is circulating this conference. So I didn't start that rumor, but I'm certainly happy to spread it. But that fundamentally is the question. Everything, in my view, around cannabis valuation is handicapped significantly by the legality question, and it becomes both a timing item and a sequencing item. In other words, when does this happen? When does rescheduling happen? And when does some sort of movement on restructuring happening? That we don't really talk about that much. And then how does that impact, does safer banking pass? If so, when? And how does that sequence of events impact my technology company or my cultivator?
Well, it's and you're bringing up some issues, and maybe it's time to jump into to my question about the different catalysts on the legislative side and what they would be, the panel's views of what might have the greatest impact on valuations. And Sandra, you're talking about, look, pioneers, especially LPs in Canada, and this has become something that unfortunately is just, there's been more of this back and forth, U.S.-Canada, really more as a function really of listing dynamics, frankly, and access to capital. It has nothing to do with anything to me more than that, and that Canada federalized first. But if you think about valuations and where we've come, if this was a conference 8 years ago, and a lot of us have been at these, we're here 8 years ago or 7 years ago, we would be talking about funded capacity. which is on some levels so absurd to think about today, which is effectively who has the ability to grow the most right now. And of course, at a time when we talk about the illicit markets and their impact, kind of inherently the cannabis industry has this challenge of the fact of the matter is, everybody here at home largely could have their own organic garden. Now, it doesn't mean they're going to grow as well as the big operators, et cetera, but the point is that capacity is not the issue, and if anything, on some level, too much capacity has been an issue with valuations here. But so let's address, obviously, there are headlines daily. There was some fresh headlines yesterday on rescheduling and out of the White House. A lot of this is just repackaged news because the headlines that were the first ones, and frankly, what's been very consistent follow-through on the Biden administration's agenda after also, frankly, a lot of inconsistency, is just clarifying where we are in the process now. But we know up there is the possibility and the recommendation on rescheduling. I think this panel can talk pretty quickly, and I think most people know what the impact might be for free cash flow and for balance sheet and balance sheet reparation. And then there's the dynamics around safer banking and legislation that at least federalizes, and that's introduces the two other things. So if they would be probably payments, credit cards, and the ability to actually flow through more transaction easily, and then maybe what we were also just talking about in terms of institutional access to the sector. So exchanges. So again, rescheduling doesn't do anything to that, but SAFER could do a lot for that. So of the things I've just mentioned, let's start, Pablo. What is the most, pick one and tell me why you think it's the legislation you want, or the headline, because it's not necessarily legislation within the Biden administration.
To me, number one would be uplisting, right, and some form of federal legalization. Because
so
uplisting
just to clarify,
opens the door.
It's not free cash flow. It's not pay less taxes. It's actually pay the same taxes and have these companies go to market and be accessible to everybody.
Yeah, in my opinion, federal legalization, depending on its shape, would be, of course, favorable for the industry, and it also will open the door for institutional investors, right? But you want the uplisting side of it so they can participate. So that's number one by far. Then, of course, rescheduling, it helps on the cash flow side with 280 going away, although there are questions how rescheduling gets implemented, right? Do you bifurcate? Do you legalize at the federal level medical cannabis? And then the third point, of course, is safer banking, right? Safer banking, and there's also nuances there. How broad? Does it include credit cards? Is it just about lending and basic services? Does the safer banking language include uplisting, right? So on all of that, you have to supersede the notion of a Cole memo, right? Number two, or a Garland memo, right? That also facilitates uplisting. But from my perspective, the biggest one is getting more institutional involvement. That has to do with uplisting, with custody, and also with clear federal legalization. That's my short answer on that.
Crystal clear, and I appreciate that's a pretty emphatic answer, Sander. So Pablo's view is institutions will change the valuation structure immediately, more important than the other things. What's your view?
I mean, I would certainly agree that, federal legalization ushering in an institutional buy side and just much more, kind of explode the liquidity in the space would be great. I'm a little more short-term thinking, a little more realistic. I think rescheduling and eliminating 280E going forward would be absolutely fabulous. And I think the one thing we don't really talk about, which I think would be at least as big of an impact on the industry, would be some sort of restructuring, a bankruptcy alternative for plant-touching cannabis companies. Yeah. I mean, if you can't clean the shit off your shoe, it just gets really hard to walk around,
Which institutions want to hear about. I mean, institutional investors, and I'm overgeneralizing, and obviously there's a lot of people in this room that are either institutional investors or self-directed, retail investors who think like institutions. Bankruptcy is a major issue.
And it would usher in more fresh capital, I think, than
Sure.
almost anything else we're talking about.
Yeah, and again, I want to clarify Pablo's remarks, because he wasn't saying, those other things aren't really important, but I asked to hear them, and I like that answer. Aaron, where do you go with this one?
So in a perfect scenario, it'd probably be similar to Pablo, like safer with capital markets inclusion, but that's
you don't get all three.
Very low likelihood.
But you could choose safer and say, I actually look, there's no guarantee that SAFER does include the legislation that gives exchanges a black and white solution. It probably is gray, it probably will be gray, and it probably will then, I think a lot of exchanges would follow through, but keep going.
So in my scenario, it would be a SAFER with some specific language for capital markets. Again, probably low likelihood where we are today. But the reason for that, we've talked about the institutions and the uplisting. The reasons why I think that's very important is because big CPG coming into the space. Nobody's going to risk their NASDAQ uplisting. Even when you look at LPs in Canada, they're not going to risk their NASDAQ uplisting. So if you get a way for some of these plant-touching operators to uplist here in the U.S., you're going to see big CPG enter the space. And I think that's what could drive a real re-rating in the stock, maybe even more so than the institutional investors. When I've been covering space since 2016, as you know, and in 2017, when you had the legalization happening in Canada, what really propelled the space was when you started having big CPG, which started in Constellation and got followed by a number of other big tobacco and alcohol companies. Coming into cannabis. They were all doing that for Canada with the sight of the U.S. So when they get the opportunity in the U.S., I'm very constructive in my belief that they're going to come in a meaningful way. So that's really why I believe when uplisting can happen, CPG coming into the space is what could really drive the sector.
To hear.
Yeah, not more to add there, but I completely agree with Aaron, and just that I think it's more about sentiment, right? Like, what is the biggest sentiment driver, and what's the biggest thing that is going to allow people to feel like they're de-risking? And all of these things that we've mentioned, there's all a component to that, but it's like when you see big players from the other industries actually engaging in a really meaningful way, that's what rises everything. And to Aaron's point, we did see that before. It didn't last because other things happened. But when Constellation came in, it was like this vote of confidence, and that's what everybody needed. And we just need a sentiment shift and to stay consistently there. So some element, and it could be any of these things, honestly, it's like some element where people feel like the risk isn't as high as it was, and this all isn't going to get shut down tomorrow, which I still feel like we're here because we don't think it will, but a lot of people still do.
So totally agree, and who knows where they were, like you heard with your parents, where were you when Kennedy was shot or something awful like that. But I I remember where I was when I heard about Constellation making their investment in Canopy Growth, and it was a major day, especially for sentiment. But I'm not going to let you off the hook, Terry. I need you to answer the question as it relates to whether it's rescheduling or whether it's actually legislation that could either address possibly the legality of what the exchanges would be willing to entertain, or maybe more importantly, as it relates to, again, credit card payments and safer banking as it truly pertains both to the operations of the industry, but again, access to a broader capital base of the consumer, again, through payments.
So my short answer is safer. I think that's going to be the most impactful in again, sentiment shift, allowing for some other things to finally happen in this space and for businesses to operate in a way that we haven't been. And then I would add a whole bunch of caveats in there, but I think safer is my short answer.
Great job. Thank you. No, I think it would be interesting to quickly talk about strategics, even though, they are looking at valuation variances too. They may be looking at opportunity costs. So we said 10 years ago it would make sense for tobacco companies to be major players in cannabis, not because necessarily, yes, they are growing a crop. Yes, there are a lot of elements in terms of call it the ag element to the business, but probably most importantly because of what tobacco companies are really well known for, which is also compliance and distribution and branding. And then obviously we've seen in the last couple months some pretty interesting stuff. Maybe it's the last 6 months, whether it's British Tobacco, whether it's is Altria selling off assets to get in more deeper into the beer, out of the beer business and into the cannabis business? I don't know, but Sander, give me your sense again from a legal chair. You're speaking to the types of people that are kicking the tires in Fortune 500 companies, in addition to the companies that are obviously looking to figure out who their dance partners are.
Altria and companies like that, they have their balance sheets just dwarf even the largest MSOs, right? So they have the ability to stalk the sector from a distance, knowing that they can pounce at any time. And so for cannabis operators and cannabis advisors, that's always the hope, is that at some point somebody with a monster balance sheet can come in and pick out who they want. And they are definitely doing that. I think they are biding their time a little bit, because they realize that whatever action was anticipated back in 2018 when Constellation put their money into Canopy and Altria put their money into Kronos, they realize that's a longer time horizon. That was 5 years ago, but they're still there. They still see the opportunity, unquestionably. And I think for them, they realize, their cost of capital is a rounding error compared to everybody else.
Yeah, yeah. Anyone else strong thoughts on strategics and what that means for, I think we know what it means for valuations, but where they might possibly be looking at the sector right now, maybe because of valuations?
So I think they're taking a very long-term view on the space. A lot of times in cannabis, we're thinking about, the next year or two. I think they're looking at, the next few decades even, and they're looking at the structural declines of categories they might be in tobacco, or the fact that they're seeing among, younger adults, lowering alcohol use, increase in cannabis use. And if you do the waterfall effect of those aging younger cohorts, they know what's going to come in the years down the road. We've talked today about how, we're not seeing the top line growth we might expect, from some of the operators, but we are seeing it in the industry that Pablo alluded to. I'm very much of the belief we're going to see that over time. We're not seeing some of the sales top line growth, but you're certainly seeing it in the volume. So I don't think you're going to see pricing pressure in the sector at 20%, in perpetuity. So once you get that normalized and you still get the strong volume growth, particularly from the fact if you get more people consuming it as the, overall just negative risk on cannabis goes down and these age cohorts, continue to go up, I think it's going to be a long-term growth opportunity, and that's what these strategics are seeing. I was just with, one of the folks from British American Tobacco Beyond Nicotine last week, and that's exactly what they spoke to in the investment they've made in this space as recently as last November, so not that long ago, again, 6 months. And they're seeing the long-term opportunity. That's why they're investing in R&D in the space to see when they can participate in the U.S., what's the best way to do it, and how do they capitalize.
Fantastic.
The only thing I would add is just outside of the alcohol and tobacco CPG group, it's of course the pharmaceutical industry, right? Depending on how much the medical industry grows, how it develops, how it's legalized here, medical cannabis in the U.S., there could be a greater role for them to play. And I'm not talking just about a GW type company on the biotech side of things, but more on the wellness side with some type of legal products in various countries around the world. So I would keep an eye on the pharmaceutical industry at some point.
Yeah. Thoughts here? Okay, and I'll just say that obviously, if we get some of the legislation we just spoke about, it's why. Think about the insurance industry. Forget banks. Think about the distribution world and a lot of the and even obviously e-commerce. So the ability to access, because there is a federal green light, is critical. And you're never going to see Coke and Pepsi. You notice, even when CBD was legalized, there was no way Coke and Pepsi were going anywhere near that until you had a full federal endorsement. I'm not even sure that they would be anyway. But we've got two other major topics, at least. Again, these are kind of the big picture pillars, I think, of the valuation discrepancies or variances conversation. So I want to talk about public versus private, and then I want to talk about domestic versus international. So start on the public versus private, because you spend a lot of time in both places, and you also understand what it takes to go from private to public. But is it a more interesting environment right now on the private side or on the public side? And that's a really wide open, very general question.
My opinion is that private is more interesting. I think just because, public markets in general, not just cannabis, it's been volatile for a while. I think a lot of businesses are struggling. For those who have gone from private to public and have kind of been through that experience, running a public company is like running two companies. And a lot of businesses have just not been prepared for that, and that's not against them. We just, again, don't have the resources. We don't have the manpower. We haven't been able to raise, I think, the capital that was anticipated or did and took a big decline. And managing that really volatile stock price, that alone is your full-time job, let alone everything that you need to be doing internally. So private, I think, I'm in the boat of staying private as long as possible and getting to where you need to be before you take that leap. And also, I just don't think we're in a position right now for cannabis businesses to really benefit with that listing the same way that other businesses are able to take advantage of things like M&A and that opportunity, use your listing as a currency. It just hasn't had that same impact.
Well, the capital markets dynamics of the public markets are also very different. But having that currency in the form of a stock, once you've listed, if the stock's got no liquidity, you have nothing. And in fact, it's actually a ball and chain. In fact, that lack of liquidity drags down your valuation and drags down the perception of your company. It's kind of backward. A lot of people think it's the answer. And if you think about the private markets, obviously, you don't have the same regulatory requirements, too. It's not that everybody who's in the cannabis industry wants to be more compliant than anyone in any other industry, so it's not about that. But the regulator, especially as it relates to public markets, just makes the job different. And so, Aaron, you're used to dealing with public companies, but you also have dealt with both sides of the ledger here. Any thoughts on... because obviously the cannabis public markets are on a pretty decent run. There's a lot of technical arguments. There's certainly been a lot of fundamental arguments for some of the re-rating we've seen. We're certainly well off those bases, but these charts are slowly kind of building, I think, on some of the good news here. Your thoughts?
Yeah, so obviously I'm much more focused on the public markets from the seat I sit in, but I do get a lens to the private markets, via talking to some investors that play both and also talking to my public companies that are looking at M&A. And one of the big things that have had an impact more recently from those conversations is the fact that private markets are slower to move on valuations, right? So you've had the public markets have their valuations depressed. The private markets may not have moved as much, and that's made it harder for them to maybe, execute on some M&A that they might see. So that's one part of it. Another part of it is again, the private markets wanting something already embedded, like a pro forma 280E, for what their cash flow is versus what their actual cash flow is today in the valuation. So there's been a valuation disconnect, which has kind of always somewhat been the case. I think just the public markets haven't gotten that big uplift really since probably first quarter 2021. Back when Schumer initially said that he was going to make cannabis a priority in the Senate, and the stocks had a real nice run there. Probably since that time, you've seen the valuation gap be less appealing for some of these public guys to go into the private markets.
Yep. Sander?
Yeah, as a corporate securities lawyer, I definitely have to show some love to the public markets. But not only do you have increased compliance costs, but you're out there competing with everybody else. And if the market doesn't see things your way, you can regret real fast that you're a public company because private investors might give you a little more love. I would also observe that I started out my career in the 90s and spent a lot of time in the tech space, and back then everybody wanted to be public. IPOs were going off. You wouldn't have a tech unicorn because it wouldn't make sense. You would have gone public a long time prior to being a unicorn, and now you have these private companies with multi-billion-dollar valuations, and so I think you're now seeing a similar dynamic in the cannabis space where you have larger people that are waiting to go public.
Just on the international front, if I look at the MedRelief Australia deal by Aurora or the 420 Pharma by Curaleaf, those deals on my math were around 1.5 times sales, right? Which is cheap for the type of growth you are seeing in those markets, right? Germany,
MedRelief.
What is it, 0.3%?
Well,
I'm talking about the latest one. MedRelief, Aurora just took control. They owned 8% and now they own 100%. Or Curaleaf in 420 Pharma just about a year ago. And again, those deals were done about 1.5 times sales. Those companies were private, but you look at Germany, right? 0.3% of the population is a patient. Could be 3-4% if you compare with Florida, Pennsylvania. So I would argue that the international valuations right now, which are mostly private, are undervalued. They're very attractive relative to the U.S. Not that necessarily anybody's going to jump from the U.S. to those markets. It's not an either-or decision anyway. But I would argue that based on some of the deals we've seen, which a lot of the companies have been gun shy for the most part, some of those deals have been done at very attractive multiples in markets that have significant growth potential. Australia now, it's the biggest export market for Canada, bigger than Israel, bigger than Germany.
Yeah, well, and Pablo also does a nice job of synthesizing two questions into one, as we have 3 minutes left, and there's a bit of ground to cover. So let's finish that international question, because obviously the headlines internationally, you can make an argument, have been a lot more exciting, maybe in the last couple months around Germany and expectations across the continent, and even other parts of Latin America that are also continuing to evolve. So, Sandra, any more thoughts on international versus domestic, and whether it's a valuation, compulsion that maybe people talk about you're seeing, or just assessing those opportunities?
Well, we could talk for hours about that one. I would just make a couple observations. So one is, if you go to Europe, they take a very different view about cannabis than in America. They sell their cannabis in pharmacies, and they see it much more as a medical play. The growth driver in America is much more obviously recreational. The other thing I would observe is that, and it also goes back to your question earlier about sort of the larger CPG companies and other strategics, is where does this all shake out? I mean, ultimately, if you're an Altria, you don't want to get into the cannabis business with seed to sale in every single little tiny jurisdiction. I mean, you want efficiencies, and I mean that's what you do the best, right? Is to make those efficiencies. So I think you're looking at the international market on a more macro level. And waiting to see how it all shakes out. Again, when we do have legalization, are we going to have import-export? Are we going to be able to move cannabis around the world and produce it in low-cost jurisdictions and process it in technological jurisdictions and sell it to the consumers, putting it on ships as opposed to what we're doing now, which is seed to sale. In Europe, you do have import-export in certain jurisdictions, but America is still being sort of the number one producer as well as number one consumer. When are we going to get into that import-export game?
Which it is in every industry and every sector. But Aaron, you've had a chance to see even just the close proximity to the Canadian companies and the LPs that have actually had some success in Europe, and now suddenly that game plan looks a lot more interesting. So again, just real quick on international versus domestic.
Yeah, so just real quickly on international. So yeah, I think it was, a very big step what Germany took in terms of cannabis reform, quasi-legalization, removing it from the narcotics list, which would be somewhat, analogous to removing it from the CSA here in the U.S. I think people are still waiting to see, especially from the investor front, in terms of how much that will really drive the patient growth in terms of more physicians prescribing and more patients coming to the market in Germany, particularly because there's some nuances because you also have the social clubs coming at the same time. So, but I think it's a big step, and I think it could lead to a domino of more European countries following suit. There's been a long time in cannabis since 2017. I was like, Europe is, going to be the next wave. I think now maybe we'll actually start to see that if the patients and physicians start to increase that we had expected. So yeah, and I think if that happens, those companies that have exposure to it, it'll also help those valuations.
Yeah, there's no question. And some have been rewarded recently, even in those public markets. To hear your final thoughts.
I think just going back to Sandra's point, the European market is so different. It is much more pharmaceutical. And so I think in that sense, if you're kind of likening it to what happens in pharma, it's also just a longer trajectory. And I think that the US we're moving faster, focused on the rec market. Obviously there are medical, but the line is blurrier here than it is in any other market. And I think the near-term opportunity is still more North America than it is Europe, but we'll see.
No, it's fascinating. So as we wrap up this panel, and by the way, apologies for the silliness of me showing up here late, and Javier Haas would have done a much better job moderating this panel, by the way. I feel bad that I wanted him to stay, so he was great. One last 15-second statement on valuations, and Pablo, my guess is you're pretty excited.
Yes, I am, but the way I think about it, and to me, you said 15 seconds, but
it's got to be
this
15.
is to me a momentum-driven sector, right? And we were at 55 on the MSOS ETF. Came down to 5. We are now at 10. There's a lot of expectations what may happen next. If you're just thinking based on that chart, right, you have 4 or 5 times upside if things go well based on expectations, and downside 40%. So the setup is very attractive
Risk
from that
reward
perspective.
to the upside.
Yeah, forget about the valuation multiples. The only problem is that anyone looking at that math has to understand that if things don't play out as a consensus expect, you could have 30, 40% downside
Gotcha.
in the
We
short
gotta
term.
keep
Long
moving
term,
forward.
you may want to think, long term, you still have upside.
Sander.
I mean, ultimately, you know, you got to take a long-term view. This industry is going to be far fewer players. There's going to be a whole lot of mergers and acquisitions between now and whatever that time is. The only question is, what is that point in time? When are we going to get there, and what's the path? What are the steps to get to that fully legal market where everything consolidates the way we expect it to?
And we have a few left. Aaron.
Yeah, I agree with both. So you need to agree with that, and through that lens, you need to find operators who can execute in the current regulatory environment today, assuming nothing changes, but also can benefit for some of these meaningful catalysts that could happen, but aren't fully reliant on those happening in the immediate near term.
To hear.
And focus on good operators, and valuations are an art, not a science. So just keep that in mind. There's no hard fast rules in cannabis.
Awesome. Thank you, everybody. Great panel. Thank you all very much. Thank you, Benzinga.